Welcome back to XRP Insider, and welcome to today's explainer where we're diving straight into the intense buildup happening across the digital asset market. If you've been watching the charts over the last few days, you know things might look a little calm on the surface, but underneath, we're actually seeing some of the most fascinating structural setups of the entire year. So, what exactly happens when a $2.7 trillion market just holds its breath? Well, that's exactly what we're witnessing right now. It's a massive tension phase. Traders, institutions, algorithmic bots, they're all essentially waiting for a definitive breakout. It is literally that classic calm before the storm. But to understand where this storm is going to hit, we need to look at the exact levels where the pressure is building up the most. Section 1, Bitcoin battles 79K resistance. We absolutely have to start with the high-stakes war happening right at the ceiling of the market. $79,000. Bitcoin is repeatedly slamming into this critical level. And look, this isn't just a casual number we're throwing around. It's signaling a fierce, sustained war between buyers trying to push us into new territory and sellers who are aggressively defending this ceiling. Every single time the price gets near this zone, the selling pressure just spikes. The violent price action we've seen this week really tells the whole story. We came into Monday with incredibly strong momentum, pumping all the way up to 79,500. But the sellers stepped in hard, and by midweek, that pressure didn't just stall the rally, it forced a slide all the way down below 75,000. Then, the market recovered, gathered its strength, and by Sunday morning made another aggressive run at 79,000, only to face yet another harsh rejection. It just proves how incredibly strong this barrier really is. But here is the real takeaway. Despite failing to break out to the upside, capital is heavily parked in Bitcoin right now. Its market dominance has climbed up to 58.5%, keeping its market cap steady right around $1.57 trillion. This tells us that even though Bitcoin is struggling at resistance, investors aren't fleeing the market at all. They're holding their ground in the premier asset, just waiting for the dam to break. Section 2. Fed rates and geopolitics. Let's shift gears and look at the macro forces actively pushing and pulling this market volatility behind the scenes. We saw a massive clash of external forces this week. On the domestic side, the Federal Reserve kept interest rates unchanged. Now, the market largely expected that, but it still caused some jittery, sharp moves. But then, clashing right up against that, we had breaking global forces, specifically reports of new peace proposals between Iran and the US. That geopolitical news actually sparked the late-week rebound that pushed Bitcoin back up to test that 79,000 level on Sunday. It's a textbook example of just how sensitive digital assets are to both traditional economic indicators and global diplomacy. Section 3. XRP prepares for breakout. Now, while Bitcoin battles loudly and visibly at the top, XRP is telling a very different, much stealthier story right beneath the surface. Let's really look at the structure here, because things have changed. Earlier this year, every single time XRP touched the resistance area between 147 and 145, it collapsed immediately. Sellers would just crush it. But look at what's happening now. XRP recently pushed toward the 149 level with strong buying pressure, and instead of a sharp sell-off when the breakout attempt faded, it stabilized. It's currently holding beautifully in the 140 to 146 zone, tightly coiling near recent highs. In trading, when an asset keeps returning to a resistance zone without a sharp rejection, it means the seller pressure is fundamentally weakening. And the trading volume absolutely backs this up. During the May 11th, 1500 UTC trading session, a staggering 105 million XRP changed hands as the price surged above 147.50. You simply do not see that kind of explosive volume without serious, heavy-hitting market participation from both retail and institutional players. They are paying very close attention because this setup could easily dictate the next major direction for the asset. And here is the crucial point. Behind the sideways price action, Ripple's fundamental institutional story is getting exponentially stronger. They just secured a massive $200 million funding facility from Neuberger Berman to expand their margin financing. Following their Hidden Road acquisition, Ripple's prime brokerage revenue has reportedly tripled year over year. And if that wasn't enough, they're now participating in a tokenized treasury settlement project on the XRP ledger alongside traditional giants like JP Morgan and MasterCard. The market is slowly realizing that Ripple is literally building the plumbing that will connect traditional finance with blockchain technology. Because XRP keeps returning to resistance without strong rejection, and because this institutional groundwork is so solid, analysts are currently split on what happens next. If buyers finally break through this key resistance wall, we're looking at an explosive bullish upside, with targets pointing straight toward $1.82. But if the momentum entirely fades and the broader market turns, there is a bearish downside risk of dropping back toward the $1 level. Either way, this tight consolidation phase means a massive move is absolutely imminent.
Section 4. Standout altcoin market moves. Let's zoom out a bit and look at how the rest of the altcoin market is reacting to this massive consolidation from the heavyweights.
The broader altcoin space is mostly quiet, but we've got a few isolated, very telling pockets of momentum. The major players are stable. Ethereum is holding strong about its $2,300 support, BNB is hovering near $620, and Dogecoin is sitting quietly right around 11 cents. This basically means traders are largely waiting for a clear signal from Bitcoin. However, we do have some real outliers. TRX pushed up 3% to 34 cents, showing some great independent momentum, and Algo is catching the eyes of short-term traders with impressive double-digit gains. Conversely, assets like Bitcoin Cash and Hype are seeing noticeable declines, which proves that even in a waiting period, capital is still constantly rotating. Section 5, Consolidation before the storm. All of these separate moving parts lead us straight to the current macro view of the entire crypto landscape. The total crypto market cap remains coiled at just under $2.7 trillion. And honestly, I want you to think of this number not just as value, but as pure kinetic energy. The market isn't inactive right now. It is storing up an incredible amount of energy for the next major directional move. Every single day that Bitcoin bangs on that $79,000 door, and every day that XRP coils tighter at 146, that stored energy just multiplies. So I'm leaving you with this final question to wrap up today's explainer. As the tension builds across this $2.7 trillion ecosystem, which of these massive assets will be the one to finally ignite the market? Will Bitcoin shatter its ceiling and drag the entire space higher? Or will XRP's massive institutional buildup trigger an explosive solo breakout? Keep your eyes locked on those key levels, because the calm before the storm is almost over. Thanks so much for joining me, and I'll catch you next time as we continue to unpack the future of digital finance.